Should you save for retirement in 2023? Well, let's talk about it. On today's show, we're going to talk about whether you should be saving for your retirement and in your investments in 2023. And John, we get a lot of different questions about this as to whether people should be investing in the chaos and uncertainty of today's economy. And we just want to break down a few items to help people make their own decision as to whether you should be investing in a market like we're in right now. And so when you look at today, let's talk first about what's affecting the stock market right now.
Yeah, well, I mean, there's a ton of volatility. In a nutshell, what's affecting the economy more than anything is the Fed policy and interest rates due to inflation, which has been stubbornly high. Now, personally, you may not agree this or not, I think Chairman Powell has been asleep at the wheel because he gets in front of a camera and talks about how they're doing their duty in raising interest rates. Well, the truth is, in my opinion, they should have started raising interest rates a little bit years ago. Now, he's not totally to blame, but he's not really doing us any favors when he acts like he is, because if you just listen to him, you would think inflation in 2022 snuck up and was 7% year over year, 6.4 right now year over year. They get an inflation reading every month. Okay, yeah. So if you're getting a reading every month and you're not doing anything, you're kind of not doing your job. So I kind of think he's been asleep at the wheel.
Yeah, and I mean, he just came out and said we're going to raise rates even more aggressive, right? Which the market doesn't like that kind of uncertainty. Mm-hmm. But what we see coming down the pike for 2023, we do have some headwinds to get through. One is inflation. We have to make sure we get control of that through the Fed policy to be able to slow down the economy, to actually provide a support level for future growth, right? Mm-hmm. What we're heading towards is a support level that will actually help your investments grow over time. And then we have to get past the debt ceiling debacle or debate, whatever you want to call it, coming up here towards the summer. So if we can get past those two items, we really believe moving into third quarter, towards the end, maybe fourth quarter, is where we'll see that support level, and we'll actually see investments continuing to improve and hopefully get back on a track of consistent growth in our economy. And so whether you should invest right now may be determined by what phase of life you're in. Mm-hmm. If you're younger and have time, I would say 10 years away from retirement, maybe even 5 years away from retirement, investing in down markets is absolutely the best move you can possibly make. We've all heard buy low, sell high, but unfortunately, our emotions tend to cause us to do the opposite sometimes.
Yeah, I would say even the same thing for older folks. If you're retired, first of all, make sure your income is taken care of. And then with the rest of your portfolio, you can buy time on the market, because that's what the market really needs, is time. Yeah. But if you're retired and don't have income where it's sustainable and you're getting that each month, then you're becoming what we call a forced seller in a down market. And so, there's all these doomsday people are out there, these people you'll get emails from that if you buy their $39 newsletter or put money in the gold coin that they put all of them, of course, they're not paying them any money to run those commercials, that your family would be saved and Armageddon will never happen. Well, the economy is a cycle. This is a business cycle. You go through contractions and expansions. To your point, Dan, I think there's going to be some rough patches over the next couple of quarters. But really and truly, decisions that you make today towards the future, whether you make emotional decisions that quite frankly tend to be bad, or you make decisions for the long term, and an investor, really conservative, moderate, or aggressive, you should be long term on some of your investments. It will really determine how you come out of this, whether you're smiling down the road or you're even more concerned.
Well, and don't give in to the fear of following the crowd, right? Yeah. In fact, Warren Buffett, right? The famous quote, be greedy when people are fearful. Mm-hmm. And he actually has the opposite, be fearful when people are greedy. Mm-hmm. But we do the opposite. We allow emotions to drive our investment decisions. It's the worst thing you can do. If you can adhere to a disciplined investment strategy and really look for taking advantage of opportunities in down markets, there really isn't a better time to be an investor than in a market market just like we're in right now. So stay the course, be disciplined, continue to invest. If anything else, find as much money as you can to invest in the market today, and you will be rewarded as an investor long-term over time as the economy continues to grow and improve. All right, so what do you guys think? Is now a good time to be an investor, or is it isn't? Leave us some comments below. Let me know what you think. And thanks for watching our show today on retirementtalk.com.